We're back. We're back. I was too busy trying to get a snack, you know? I was trying to get a snack. And a snack. Spy with a bit of a triple top there. But unbelievable, Tony. Yeah. Misty. So Misty paid $1.18. Here, Fed will cut rates in September. No. I'm just reading some of these headlines because Trump is tweeting. Because they're paying attention to this, right? They're paying attention to all of this stuff. So let's see. Virus, are you guys still in those calls? Puts? You still in those puts? You got your monies ready? Yeah. So that thing tripled up, even though it broke out really quickly, came back down to earth. Still in? Okay. You should be green now because I think you got like a nice top there. And then chaos in 7 minutes, guys. 7 minutes, and then you're gonna see these candles go crazy. I wonder if we just go crazy up and down and then stay in the middle, Yeah. Should get back to VWAP SPY. Yeah, it's all the way down there. Probably. If there's any indication of a cut, though, oof. It's all-time highs right away. All-time highs. Yep, we're bouncing back already here. How did Virus get second place? He rigged the system. He scammed the system, is what he did. Every other thing that we're look at this Jeff in the chat. I think so, right? Maybe not, but damn, Jeff, that was a really nice run up when you mentioned it. Actually, no, never mind. I had to go back and look at someone's position from a few days ago, so that's old news. But yeah, that was a nice little pump though. 355 breakout and then boom skis all the way to $4. Still feeling at resistance. You're waiting? Yeah. Now I dropped off my ladder. No, I was just saying when you mentioned it earlier, right? It was a really good call. But we still needed to break out though, right? And that's what we said earlier, right? Make sure we break above 355. As soon as it broke above 355, Jeff, it was gone. Right? There's really nothing you could have done here. Rolled my ankle for your disruption. Right? There's nothing you could have done. Right? You had to wait for that breakout, 355. And as soon as it did, it said bye-bye. Go. Right? So now you're probably playing with the 200 EMA or wait for another breakout of 388. So next support is 365, next resistance 388, 390. And then $4 is your 410. Let's just call it 410. 410, 405, whatever. That 10-cent range. The FOMC minutes are coming out, not minutes, right? The official statement, right? Comes out in 4 minutes. Again, the expectation is that the Fed will keep rates the same, but what the market wants to know is what are you going to do going forward, right? Are we still going to have the same conversation of blah, 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 blah? We're still waiting to see what tariffs are going to do to the economy before we decide to cut rates. That's what the market wants to know. Because everything else we already know. We know they're not going to cut rates. They're going to keep it the same. We just want to see what the future looks like, right? And that's the amazing thing about the market is the market usually knows what's going to happen. It just doesn't know what happen knows like what happens in the future, if that makes any sense. Yeah. So almost like earnings, right? So guidance. Let's go, Raven. Love it. This is how you get number one. Yeah. Yeah. Raven, save that monies. You need to be number one next month. Dan's probably gonna win this month because he has too many points, too much time at number one. So he's definitely gonna win. Tomorrow is the last day. Save it for next month, Raven. And then we're gonna need to design Raven a T-shirt. Raven's gonna need. See, Dan is all set. Like Dan is ready to win. Like no one's winning. Not today, he says. Unbelievable. Is this Dan's first message in the chat? It is, isn't it? Unbelievable. It's almost like he has he has senses. He can sense when he's no longer at the top of the leaderboard. Not today. Question for you guys in the chat though. What do you think happens with the do we go up? Do we go down? Two rate cuts, no rate cuts this year. What are you guys thinking before we get that rubbish in 3 minutes? Dan, unbelievable. So Dan, let me know what you think as well. So let's say I think we just kind of so Peter designed this T-shirt and we just kind of left it the same because it looks pretty cool for Dan. Will this give me number one? Let's go, Peter. Do you want Dan? Do you want the bottom where it says Alpha Blood Killer Instincts to be replaced by Hot Traits? I think it should. You know, but do you want something else down there or just leave it the same? Let me know. Let's go, Peter. Are you on break, Peter? Meeting break? I need you do. Yeah, those rates needs to come the rates need to come down. The rates need to come down. He's hiding in the bathroom? Oh yeah, so are you, Jax, probably. Two people hiding in the bathroom, Peter and Jax. Unbelievable. Less than a minute, guys. Less than a minute. The chaos is coming. I predicted 25 basis point cut. You think so? Oh, the entire year, not today, right? Yes. Pizza, do it. Jax, you are hiding in the bathroom, aren't you? Alrighty, so we're gonna see the candles move, and then we should be able to tell what the Fed has done. You know. So I'm gonna pull up my news feed here, and then wait for the chaos to happen. Don't blow your evals, please. Here we go, guys. Here we go. 3 seconds. 2, 1. Chaos. What the hell is this? Is the market still digesting this? This is the smallest, most useless Fed candle I've ever seen. That thing's barely moving. I mean, it's a 5-minute candle, so that's why you're seeing less volatility, but wow. I mean, we are at the highs of the day, but this is pretty so the Fed holds rates at 4.25. Elevated outlook uncertainty says economic growth blah 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 blah. Okay, so there's really nothing there. It's nothing there. We're pushing for brand new highs of the day, though. Let me pull up CNBC here. These guys should have a better Yeah, so there's really nothing new, right? So we expected this, right? The rest of the article is still loading. Um, yeah, the rest of it is still loading, but rates stay the same. Anybody surprised? Uh, yep, no change. Surprise, surprise? No. No surprises. And that's what we expected. Let me read Dan's post here. Although swings in net exports continue to affect the data, recent indicators suggest that growth of activity, unemployment rate remains low, labor market conditions remain solid, inflation remains somewhat elevated. This is the same rubbish Powell is going to be reading, achieve unemployment and inflation at the rate of 2% over the long term. Uncertainty over the economic outlook remains elevated. The committee is attentive to risk to both sides of the dual mandate. It's the same rubbish, right? Now we're dropping. Yeah, there's not a whole lot else in here. Yeah. uh, you know what? Yeah, they're slapping it now. So that resistance is acting as a nice little wall that we just went from 637 to 636. 637 to 636. Governors Waller and Bowman dissented in favor of rate cuts. Hmm, interesting. Breaking news, nothing. Yeah, there's really not a whole lot happening here. Mm-mm-mm-mm. So we're waiting for Powell to come on in 30 minutes, 27 minutes. He's going to be on. And then I think the market will really decide what it wants to do, right? Because we can get more information from those guys asking questions than we can from a stupid statement, right? But for now, we're basically back to playing with the bottom of the range. That would have been a nice short on that pop. Jax, did you short it? You're too busy laughing in the chat. You could be making monies. Ridiculous. Ridiculous. Yeah. I need a vacation, so Jax needs to make money. Uh will be. I never understood that. No surprise about stock. Act surprise makes no sense. It's based on sentiment and outlook for the future, Joseph, and also the market makers just being criminals, right? It's almost like every time we got a tariff headline a few months ago, the markets would crash. It's not like we actually got something that was like super hurtful. The market just wanted to crash. Peanut butter. Yeah. So we're just in the middle, guys, right? So like I said, we're not gonna pick a direction until he's on, right, and yapping. Then we're gonna decide which way we want to go. 50% tariffs on Brazil. Like, what supplies do you guys even get from Brazil? Some of these tariffs, some of these countries, you're like, who the hell is that again? What did they buy from the states? What do you guys buy from them? That's right, nothing. $2. That's why China, Mexico, Canada, and the EU. Those are the big ones. And then countries like Japan and drugs. Some of these countries, yeah. Some of these other countries, it's like there's nothing coming from there. Yeah, that's about it, Martin. Soccer balls and women from what's that show again? What's the name of that show? Someone knows the name of the show. But that's about it, though. I'm kidding, guys. I'm kidding. They'll figure it out. Trump. Okay, so traders still fully priced in at least one rate cut in 2025. Sounds good. Sounds good. Okay, okay. 1205. Do better. More jacks. Is there Big Brother today? Tonight, yeah. But then we usually watch it like the day after Peter. Um, because you need to have, I don't know, do you have a subscription, Peter, that lets you watch it live? Let me know. That'd be cool. Yeah, mine doesn't. I can only watch it the next day unless I watch it live on TV, but that's obviously can't watch it on TV. 24 minutes. Straight to jail. Chris, yeah. That's it. No ice. Yeah, that's the one. From Chris. Nvidia's cooking. Is it actually? NVDA. Can you believe Nvidia is at $180, guys? Nvidia just hit brand new all-time highs. Actually, no, it's 1 cent off the previous all-time high, but it's about to hit it though. It's 1 penny away. Can you believe that? Crazy, huh? Crazy, crazy. $4.37 trillion market cap. Spy. Obviously, Nvidia is going up. Spy is gonna want to push up too, right? I have a feeling we're just gonna go up today. um, we're just gonna go back up today. I think the part too though that people get a bit confused with, like with these rate cuts, is, like everybody's expecting that, oh, with the rate cuts that's when the market cooks, like we're gonna keep crashing until the Fed actually cuts rates. The part that people forget is that when those rates are high, it's usually for a reason, right? The rates are not cut usually for a reason, right? Because the economy is good according to these guys, right? So when those rates stay elevated like that, it's signaling to the markets that the economy is okay, right? So now Powell is saying everything's okay. We're waiting to see what tariff data looks like before we decide to cut rates. You know what I mean? So that's why there's usually pivot when like the Fed decides to cut the rates, then the market actually goes down because now we're signaling to the market that things might not be okay, right? So yeah, 6 months later, yeah, exactly, right? So with the rate cuts, usually a signal to the market that things are not as amazing as we think, they might be. So the markets are like, well, if we don't cut rates, we keep dipping. We dip a little bit, right? When the Fed's like, oh, we're not gonna cut rates today, the market's like, oh yeah, we dip a little bit, but then guess what? We go back to all-time highs. Why? Because everything is okay, right? The part that's annoying is people can't seem to get favorable rates. You can't refinance. You can't get, like low rates, no new monies, things like that, right? That's what Trump wants. The Fed has a different goal, though. The Fed doesn't have the same goal as Trump, right? That's the issue. So yeah. So it'll be interesting to see how he sounds when he's yapping. Anyways, here comes 637 again, right? So not cutting the rates is not a bad thing for the market. The market doesn't see it as a huge negative, right? When the market is dipping, there's usually rate cuts. The rates not being cut, but there's usually something else that's a problem, right? There's usually something else, not just the rates. That's true, Dan. Yeah, that's true. I need lower rates so I can buy an Nvidia card, right? So that's what the rates are for, basically. Ending the month so I can a UVIX for August. Speed, yeah, yep. I should have waited till like the end of the month to pick up more puts, but yep. NVIDIA ended up making brand new highs, guys. All-time highs. Look at this chart. Look at this. Look at this. Look at this. Look at this beast. Look at this. If you bought NVIDIA when it crashed to 80 $90, if you bought this thing here, oof. My goodness, are you smiling right now? Look at that. Right? If my goodness, from April virus, right? April virus was spamming Nvidia, Palantir, AMD, especially AMD, right? AMD's recovered from from the stupid bottom there. Look at where AMD is at now, guys. Like look at this, right? From 70 $80 all the way to 109 180. Now we're sitting in a supply zone here going into August, right? Yeah, like everything cooked. This might be a good spot for some AMD puts though. Pizza. This might be a good spot for some puts. That next high is like 185. Next resistance. Yup. So congratulations if you bought some AMD. This, and a whole bunch of other things. SPY, AMD, NVIDIA, Palantir, a whole bunch. Right? Again, July has been historically the best month of the year, right? And it's shown why again this month. With SPY, all these stocks, right? But now we're going into August. Watch, we're gonna say all of this, and August is gonna be cooker. We're gonna be cooking in August again, huh? We're gonna be waiting for dips, and the market's gonna say, "Yeah, you think so?" No, you don't get no more dips this year. We'll see. We'll see what happens. We shall see what happens. Either way, we'll be okay. I saw that, Dan. Yeah, the two loudmouths. Those two are always yapping. See, I didn't know that Bowman person was a woman. A woman. Bowman sounded like a man. I don't know, just the name. But yeah. So yeah, so 9 to 2 for unchanged. Anyways, back to the S&P guys. We're just kind of going up and down in range for now until Powell comes on in 15 minutes. 15 minutes. August and September, yeah, usually, right? So usually it's like that. So we go from August all the way to September and then October, right? October is like if you remember, like if you go back and look at what's happened in the past, October like is usually like the low, right? Like one of the more painful months. And then we carry on into Santa Claus rally, right? So August, September, October. I doubt though that we're gonna have 3 months of pain. I highly doubt that. October pizza. Yes. Say it with violence. Already? Violence. There we go. What price were you looking at? That was the 200 EMA, which was actually quite nice, Tony. That would have been perfect. That would have been perfect. 200 EMA boom skis. And then 780 resistance. That would have been nice. Would have been nice. There we go. I think you're gonna get it, Dan. I think you're gonna get it. One of the next 3 months, you're gonna get it, and then we can carry on to 700 for SPY. It's a race to 200. I think if that's a race, I think AMD wins that race. If you're looking at market cap as well, crazy. Can you believe we were buying AMD calls, 200 AMD calls like 2 months ago? Can you imagine if we kept those calls, how green they'd be right now? Peter was buying 600 SPY calls at 500 for SPY. And then the useless goats decided to sell it, right? Those 150, 160 NVIDIA calls at 90, 100, sheesh, everything in the money. Not quite yet, but yeah, exactly, Wes. That's what I'm saying. Mm, mm. 56, 680. There we go. Virus, yeah. No, that was really good. Okay, back to the S&P, guys. Clearly, we're just going up and down in the same range. I still don't think we're gonna pick a direction until he's on. So, because the reporters should be able to get a lot more out of him than a statement, So unless he's just dodging the questions. Breaking news: Congress just passed the Pelosi Act that would ban stock trading by members of Congress, passing it out of committee in a narrow 7 to 8 votes. Damn, those dudes wanted to trade. Okay, that's cool. I mean, they're trading with information that they should that they have already, anyways. So yeah, I call it according to yeah. No way. Yep, that's good. That should have happened a long time ago. But that was pretty close for a vote, 8 to 7. Pretty close. Yeah, exactly, Peter. Exactly. Why is your head so big in this picture, Peter? Anyways, uh, and I don't know how people hold. Honestly, virus, it was pretty hard. My colleagues and I remain firmly committed to. uh, anyways, by 30 to 120%, 20% increase yearly, 30 to 120. Yep, not surprised. So 10 minutes to go, guys, and then we will hop over to the Fed website and listen to that conference. Let me pull up Nvidia again here. Nvidia is way nicer to look at. Nicer to look at. So a bit of a retracement there. Not that anybody cares, but it's pretty crazy, isn't it? ah. Sorry. I take that back. I don't want violence. No violence. I think virus. Did you close your position for puts on SPY? I think we're gonna break out when he's yapping. I think we're gonna get another push. Ah. Unbelievable. Hero or zero position? Okay. Yeah, then you need a crash. I just don't think he's gonna give us anything, that's gonna cause the markets to retrace like that. But even if we do retrace back to the bottom, like the lows of the day, those things are gonna print. So 635 maybe. Is that what you're looking for? Yeah. So now the range is 637 versus 635. If we break below 635, we're done for the day, right? No, no, done. And that we might just go into August with that same vibe, just the sell-off vibe, right? But if we break above 637 though, yeah, then all-time highs probably. Then yeah, we'll see. 9 minutes, guys. It's not a bad pop. United Health. United Health. There we go. 36.15. 36.15. You're a dollar away, virus. Yeah. Yes, Pavan. You have the 200 EMA and the VWAP sitting right there, right above 636. So it's gonna try and bounce off that level. Then if it doesn't hold, then okay, violence. But it's gonna try, and it looks like it's popping already off that level, right? 636 ish. Wingstop earnings. No, it's bouncing off support for now. So bounce of support, Ms. Jacqueline. I think they've updated the stream. That's why it looks so different. Was I muted this whole time? Oh, I was here roasting Jax. Oh my goodness, I was muted. I was roasting Jax on mute. Yeah, Ridiculous. Anyways, I was saying how Jax, Jax killed a bat. So all of you people in the chat that are like, "Oh my goodness, Jax, she kills things." Can you believe that? Poor thing. Uh, Craziness. No, yeah. The stream just muted. Anyways, Pavan, that's a really good balance off the bottom there. 4 minutes to go before Powell is on, guys. 4 minutes. 4 minutes. So again, if you're just joining, the Fed has done exactly what we expected them to do, right? You know what's crazy is how they're saying, "Oh, divided Fed." It was 8-2 or something like that. How's that divided? Anyways, rates are the same. Alrighty. The markets, yeah, there we go, 92. Right? How's that divided? I mean, I guess it is divided, but okay. Yeah. So we're just waiting for him to come on and yap. And yap. Spy's getting ready. I think so. That's what I mean. Like, I think we're gonna pump it. I think they're gonna pump it. Right. So a nice retest of the bottom here. 200 VWAP support, and then pop back to resistance. Yes, Joseph. I'm gonna pull it up in a minute or so. Let me do that right now, actually. Yeah, so I'm gonna pull it up. I have the website up here, so just no, they all voted. They all voted. Graphics, yep, yep. I think if you wanted some spy calls, you should have picked up those calls on a retest of the 200 and the VWAP, or maybe at the bottoms, right? If you're asking about calls, you're asking about calls, James, at resistance. I think we're gonna break this resistance, but it's still resistance, right? So you're looking to get into calls at resistance, right? So not exactly a really good thing. 3677. Are we ready? Okay, I'm gonna share that. I'm gonna share that tab now so we can move on over there. Alrighty. Yeah, it always does this. The Fed. Yeah, they're not even in the. Okay, there we go. And the S&P is pushing for the highs there. Not quite at the 37 yet, but 20 cents away. You're looking for puts? I mean, if you're looking for puts, you're taking a gamble, but that's the spot to take the gamble at the triple top. So here we go. I'm gonna mute myself, by the way.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right. It's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you ask about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September, monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be the way the economy reacts over time to slightly looser policy.
Nick Timmeros, the Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of 30 billion a month, which is, substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic, expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals. And that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that. And it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Hi, Victoria Guido with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work. And I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too. So it's quite important for our economy, and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay, this delay though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover though to raise prices?
Well, what may be giving, it's not our policy stance. What may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, if the companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's a kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. We've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting, will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down? I think closer to 2.
We'll look at everything. It's as I mentioned, a pretty reasonable base case is that this will be a one-time price increase, and in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I won't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
We're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that, but if we what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level. And delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true. And it was, again, right in line with what we expected. the GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can be can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to. And there's no question that it's slowed. And, we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, which it may be even low, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor forces is just a great deal slower, and those two things have slowed more or less in tandem. If you look at things like I mentioned, quits. Look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go around where people talk about the economy, and then that's yesterday. And then today we have a monetary policy go around all the way around the table. Everyone gives their views. So the discussion around policy was the majority view was still what it has been, which is that inflation's running above target. Maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that for the reasons that they're going to express. I won't tell you the reasons. They'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, and one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So you have to, that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff Fox.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondered if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak, and the inflation numbers from GDP today came down 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that. No, I just think we're going to need to see the data. And it can go in many different directions, the inflation data and the employment data. And we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg Robb for the last question.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Thanks very much, everyone. Michelle wanted violence. Thanks very much, everyone. The S&P, guys, look at this. Let me turn on the music again here. Thanks very much, everyone. There we go. Is it time to recover like we usually do? Unbelievable. We did break below that 635 though. I don't know what to say. Did you guys learn anything? I don't think so, right? Same old, same old. Yeah, so nothing really. What do you guys think in the chat? Good, bad, not good? What do you guys think? SGD just does look good. SGD. Tragic. Bollocks. Is a douche. Michelle. Yeah. I don't know what to tell you, you know? There's nothing that we can say that's gonna make a difference. Yep. It's the same rubbish, right? Yap. Like there's really nothing new. So we move along. You know what was interesting though is how they said we haven't really talked about cutting rates in September, right? But yet we've seen like statements from other people from the Fed that are talking about rate cuts in September. Also, the last time the Fed had a meeting, it was in the article that they were going to cut rates twice. Somehow they haven't talked about September. I think this sell-off though is coming because we've had a really big run and we're getting into August, and it always seems like there's a catalyst, there's a cause, right? And the cause is always like the main issue, right? But no, the market always finds a way to do this. Yeah, PCE tomorrow. Yep. Yep. What can we do, you know? Yeah. Again, I don't know if we know enough about Powell, you know, to say that this is political. But I don't know. Gary, monies is what happens. Yes, we do. Do you though, Michelle? Do we? I don't know. Anyways, we do? Okay. I personally just don't know, but you know, maybe some of you guys have seen tweets from the past and other things from the past, you know, that like you're quite confident that it's political, but I just don't know. Yeah, you know, yeah, everything that I've seen from the dude doesn't seem political, but you just never know, Alan, right? Yeah, you never know. Anyways, for now, the S&P is we hit a low of 631.50, right? You almost think it's a healthy pullback to 630. I don't know if any time frame would give us that confirmation though. Maybe the 15-minute, 30-minute, maybe 4-hour chart. I just want to see if there's a reason for a retest. Yeah, there kind of is. There kind of is. If you look to the left-hand side, this was the previous high before the dip. Right, this was July 21st, 631.50. 631.50, and then we dropped all the way down, and then we came for the second breakout, right? So right there, that was the first high. Then we went down, then we came for this breakout. So this level right there is acting as a bit of a base, and then you have that demand zone, right? So it'll be interesting to see if we can stay above that, you know? So interestingly enough, that previous high is acting as a bit of a base. We shall see. Yeah. Now at this rate, SPY is going to be 2,000 by end of next year. 2,000? Oh, you mean for like the from 600 to 2,000? No. See what you see. Yep. 660. Yeah. Yes. Was anybody holding puts? Any put positions for SPY going into this meeting? I think Jameson was. Jameson, you were, right? Yeah, Virus was holding those puts and then he got rid of them. Damn. Let me look at your position, Jameson. So 62% on that. Ooh. Did you keep the whole thing, Jameson? Looks like we're trying to bounce here, though. You did, Sean? Monies. Well done. Monies. Yeah, no, I don't think we're going to see 2,000 by next year. That's, yeah. I mean, the only time we've had a 50% pump in a single year was when the previous year was a minus 30, 40% drop, right? So basically just a recovery of that and a 10% gain on top of that. So, yeah. You tripled your count? Let's go, Jameson. You tripled your count? See? You cook. Michelle, we close. I'm about to leave in a few minutes. And you want to come bring violence? I know that. Yeah. Yep. Crazy. What a day though with the markets. My goodness. Yeah, some of these candles are crazy. I Michelle. Let's see. Are we gonna sell up to the bottom again? Kind of looks like it, huh? Looks like the markets are looking for violence again. Looking for violence, spy. Uh-oh. Uh-oh, spy. I thought we had hit the bottom when he left, Maybe not. Maybe not. Can you imagine if we went back to the bottoms again? Huh. And then we have earnings after hours too, right? Microsoft and Meta. Shish. What a crazy day today. I don't know. You're killing the calls? Yep. In terms of like other stocks we're looking at, let's see, anything else that you guys are paying attention to going into the close? Any swing plays you guys are looking at? Any swing plays? NVIDIA is not that far away from those highs still. Not that far away. Futures? Okay, I'll take a look. Volatile day, good day to make a lot of monies. Yep. Yeah, it looks like SGD is the only thing that has a lot of chaos there, momentum wise. Before the dump, isn't that crazy, Jameson? Perfect day for you. And can tomorrow? Let's jacuzzi. Jameson, let's go. Yeah. Yeah, days like today, you usually get some nice pumps and some nice drops, you know? So yeah, you should be able to play both. Like we initially had that pump and then we had the crash. Top step. Are those evals? Are those evals, Dan? Or what are those? Which ones? Which? Oh, those are funded accounts? Oh my goodness. I like it. It's looking like we still want to go back down there, doesn't it? I need more water. I ran out of water. Well done, Jameson. I'm very happy for you. That's amazing. That's amazing. Before the tax, because of the tax advantage, it's better. Okay. For basic gambling, yeah, I like that, Dan. That's cool. Oh, that's cool. It looks like everything's red now. Everything is red. But again, I think we all knew that these dips were coming, so it's not like we're being shocked, surprised. SGD is still looking like the best name going into the close for now. Uh, there we go. Yep, last 30 minutes. Testing the double bottom there. Testing the double bottoms. No, we're sitting at a double bottom, Jameson. We might, yeah. Breakout. Yeah, it looks like that bottom is holding for now. So 631.50. I know, right, Bilal? Seriously, the only thing that's looking hopeful is HDD, but it's also at a triple top. So that's already hitting resistance. Resistance. Anybody playing earnings tonight? Any gambles into the close? After hour gambles? Are you crazy? No, I know those things used to be so much fun, but they're not really anymore. 205. 2.05 break and hold. IXHL just had a little bounce there. A little bounce. Oh yeah, so it's tempting. It is. It is. We do have some pretty big names reporting. So earnings tonight. Meta, Microsoft, Robinhood, ARM, Ford, a whole bunch. A whole bunch. I'm gonna post that list in the repost that list in the channels there. Yep, exactly, Dan. Maybe some Robinhood puts, some Robinhood gambles. Those guys have been pumping forever now. Maybe not. Just gonna throw money in the garbage. Puts were at the top, right? We already crashed. Look at that. Puts were all the way up there, right? We're sitting at the double bottom now, so you almost need to wait for the break below the double bottom. If we break down, then yeah, sure, maybe. And again, we're going into one of the worst months, right? So, but yeah, you kind of missed the opportunity on the puts there. Oh, Meta. Let me take a look. Meta. Yeah, Meta is down almost 1% today. Yeah, this would have been really nice, Fabian. Right, the double top. Right, double top on Meta there, and then double top. So 740 to 695. Those would have been nice, right? Yeah, not sure how I feel about Meta puts. Meta isn't gonna miss earnings. Meta doesn't know how to miss earnings. But the question is all the good news priced in, right? That's the only question. The last time Meta reported earnings was right there. That thing started cooking to this high. Before that, a bit of a double top fail, pump, fail. So it's kind of a mixed bag, isn't it? The only thing that I can see going negatively for Meta is that it's so high, right? But yeah, no, it definitely is a gamble. It's complete gamble. Nothing else to this. Same thing for Microsoft, I think. Yeah, look at Microsoft. Like, look at this damn thing, right? Like, look at this. Like, since the last earnings report, like right at the earnings report, right here, right there, it's been flying ever since. Now we're sitting at brand new highs. So if you're getting puts for Meta, it's just again for Microsoft, it's because it's too high, not because you're actually shorting a horrible company, right? You did tomorrow. Hopefully they're cheap and you're not risking any of your gains from today, though, Jameson. Yeah, let me take a look at Robinhood. Watch now, Robinhood is gonna be like, excuse me, 150. But look at this. Like it, like it's been flying. And it's also green today. When the market's red, it's green. So yeah, I think we definitely need some dips here. If I was gonna take some puts, YOLO put, this would be the one. $25, yeah. So this would definitely be the one. As nice as Robinhood is, it's not as good as Meta and Microsoft. I don't want to be betting against Meta or Microsoft. I think Robinhood is a good company, but it's done quite a lot. It does, right, Sean? It just needs to cool down. We're not trashing it or anything. It just needs to cool down. So if I was gonna bet against anything, it would definitely be this one, because Microsoft can keep going, Meta can keep going, right? Companies like that, meh. I don't know, Tony. I was hoping it would, but they wanted to raise money, I guess. Yeah, looks like we just failed at resistance here. We're potentially retesting the VWAP here. Yeah. Let's see. Ford doesn't usually move that much though. Virus, I know. Dang. Why? Bro. Those things were gonna pay you so nicely. That initial pop though, Virus, that pop right there, it was a breakout, right? Like you had all of this resistance right here from like early mornings and the previous day, right? So that breakout right there, that thing was ready to cook. Yup, exactly. This paid Jameson, right? Like this could have just gone, right? Yup. And then it crashed back below and then yeah. Then just went to the abyss. Yup. And now we're just playing with 631.50 here. Yup, mission accomplished. Hit stop loss. Yup. Yep. Yep. That's frustrating. Looks like for some reason SPY really likes holding this level, for now at least. Maybe after hours it'll be a different story. But again, remember this was the previous high, right? From July 21st. So that initial high, it's being used as support. So I wonder if they're going to keep it above that for SPY and then pump it back up. Friday, my revenge. Let's go, virus. I agree. The markets need revenge from you. I agree. Ice? Yep. Yep. Yeah, we might break that with the Meta earning. Yeah. Who knows? Who knows? Yeah. It doesn't look like it's going to hold though, because I think we're getting lower highs. Right? As time goes on, we're continuously getting lower highs here. So we only have, 17 minutes to go, but it's looking a little bit suspicious. Yeah. If that thing breaks below, then you're looking for 630. It's just there to signify boom skis, you know, because that's what we do most of the time, right? Only Trump knows. I'm surprised he hasn't put out a tweet yet saying, "Too late, Powell. Here we go again. Here we go again. Too late." Too late, Powell. Anybody looking for swing plays? The market sure what it thinks of the Fed. Yes, I guess. I guess. The reason why I hesitated though is because the market is a representation of the big boys, right? So yeah, the political views maybe. The market is so much more than, you know what I mean? So yeah, 636 call tomorrow. Alrighty. That would be nice. They expire tomorrow, Pavan, you're saying? After that dip, we get a pump and then dump into August. Virus? Yep. Yep. Dang, we're really holding this level, huh? We're fighting to hold this 631.50 level. Jameson, no more trades for me today. I'm done for the day. I'm tired. No more trades. I think so, Raven. I think if we can stay above that, maybe an after-hour run or something. Maybe. Swing it. Yeah, Spy's like, hey guys, I'm gonna hold this level with my life. With my life, I'm gonna hold 631.50. With all the last. Yeah, just be careful, Jameson. You did really well today. Take a second and digest that, right? You don't need to go back and look for more violence, please. Yeah, Pavan, you're buying that thing off support, so it's holding. Are they free ice? If the option chain is good, if it's not, stay away, Jameson. Yeah, just because you can do covered calls doesn't mean you should, right? Because the option chain might not be worth it. Nice. Nice. Do we want to stay till earnings, guys? If we're not really playing with earnings, do we want to stay or hop off and go back to Discord? Do we want to stay? You think so, Alan? I mean, the all companies that should beat earnings. Even Robinhood should beat earnings. They all should. But that's not the end of the story, though. They can still beat and still go to the abyss. I think who was asking for that question again? Your medicine. There we go. Big move us up and down. Yeah, that's a good bounce. Anybody buy this on the dip there? Little scalpy. $33. Let's go, Pavan. Well done, little scalpy. There you go. Yeah, spy. Yeah. So pretty sweet support, right? Nice. That's the. I'm not sure why I'm using the 1 minute, but yeah. So for now, Spy is holding that bottom. Yeah. Scalpies. Crazy price action. Crazy. I have a 1-on-1 in. Yeah. That song is called Rat. Because that's what Spy is. A rat. Michelle, did you play puts or calls? Or you're just not happy with the rate decision? There we go. The crew is exhausted. I think so too, Ice. Are financial advisors, Adam? Yeah, correct. Correct. That's a pretty good bounce from the bottom though for SPY. You're gonna have a little bit of resistance here at 36, 66336. Right, left hand side resistance. So this level on the left hand side is gonna act as a bit of a wall, right? And it's failing already at that level. So the chart is just repetitive at this point. Same bottom, same resistance. One of these levels will break. Maybe after earnings. We only have 5 minutes left. 5 minutes left. Close the markets. And then bring on earnings. We can hop off at the close and honestly go watch these earnings reports after in Discord. Because no one's playing positions anyways. There we go, SPY. Nice little rebound. You know what's crazy is the tech stocks are coming back to life. You know, Nvidia is dragging everything back up. Nvidia is up 2% for the day, which is crazy, huh? Nvidia is up 2% for the day. Boom, HDD, guys. That was beautiful. Beautiful HDD. That was a nice spot at 180. How's the market doing? Chaos, chaos, Danny. Yeah, this 180 was the spot where HDD bottom, 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 and then pop to resistance. 205 is still the resistance, so maybe after hours it can break. Maybe. 600 for Meta. It really did, Dan. That was a nice recovery. Nvidia is dragging it back up. Nvidia is like, hey, come on, I got you. I got you. I got you. Pretty nice. Pavan, maybe you should have kept those things. You wanted to keep them till tomorrow too. On trade deals meeting with South Korea. Okay, so Trump hasn't tweeted because he says he's busy working on making trade deals. Pretty nice. We're down 90 cents, guys. Like, isn't this crazy? That's crazy, right? Crazy to anybody? Like, how we look at this, we're like, damn, the markets are dying. And then we look on the right-hand side, SPY is down 85 cents for the day. 85 cents. Like, what happened to the dips? That's it? That was a pretty sweet bottom, though, right? This is why it's always important to look left, guys, right? Because you look left and that 30-minute chart, you can see why we're doing what we're doing, right? This was initially a double top, right? Top number all-time high, right? Top 30-minute candles, breakout. Now that level is being used as like a bouncy level. That was the last breakout. But anyways. So that was a pretty sweet spot for a W. Pretty sweet spot. It's on pre-order, Danny. Yeah, IPO tomorrow. IPO tomorrow. It's gonna be a pretty big IPO. Let's go, graphics. Yep, exactly, Dan. Cook. There we go. Markets closed with pretty nicely. Damn. Pretty nice close. We ended the day minus 78 cents. Anybody panicking about SPY dips? 78 cents, guys. Crazy, huh? So now we have earnings coming up. Earnings coming up. So Meta, I'm going to pull up Meta. So that's Meta. Meta reports. Microsoft also reports. I'm gonna leave up the S&P because SPY is gonna react to that. Microsoft reports earnings, right? You can already see it moving after hours here. And then there's obviously Kavana and ARM and Ford. Don't really care about those ones still. The last one I'm gonna pull up is Robinhood. So these are the main three that I want to pay attention to. And then HDD is a momentum stock, right? The momentum stonks. So that thing wants to break out, doesn't it? HDD. Boxer with the nice pop. That stock is still around. Wow. HDD. There goes 214. Anybody holding this one? HDD. $220. $2.20. Amazon does not report today. Amazon reports tomorrow. With Apple and Strategy and Coinbase and Reddit and IoT and Roku and Cloudflare. So yeah, some of the other big boys report tomorrow. So tomorrow is equally as chaotic. Equally as chaotic. There goes brand new highs HDD. Woof. Cooking. There we go. 231. Yeah. Isn't that crazy? Dan, isn't that crazy? Microsoft is flying there, 6%, right? Yeah, Microsoft is not the company to bet against. You don't bet against Microsoft. Yeah. So nice pump there. SPY obviously came all the way back. Isn't this crazy, guys? Like, isn't that crazy? Crazy, huh? Recovered all of it. But anyways, my favorite stock for now though is HDD, right? Because momentum stock. There we go, 242. Nice pump. Might sell some. Probably a good idea, Dan. Look at Meta. Meta is pumping now too, guys. Yeah, Meta, Microsoft, these stocks can go on forever. These two can go on forever. So Microsoft beat earnings, obviously, right? They're just stocks that you don't expect to them to miss earnings, right? And SPY is gonna cook more with that, isn't it? Robinhood is the only one that even this is like they haven't reported yet, but you can see that it's following the market, right? So $2.50 coming up next for HDD. 250. Is Microsoft still going? Yeah, and then Meta beat earnings as well. So revenue of 47.5 billion, beating estimates of 44 billion, 44.8 billion. Right, so these dudes make so much money, it's not even funny. Not even funny. Like, how do you expect companies like these to miss, you know? How? Look at that. Spies at the highs of the day. Like, isn't that crazy? Right? How? How? Sway. And then we're breaking above 250 here for SGD. Trying to. Breaking, but not quite closing above yet. That was a pretty sweet bottom, wasn't it? Pretty sweet for SGD. Sweet bottom. And then breakout. And then bye-bye. So 250 to 255, 260 resistance on this one. Profits and letting a few ride. PCE tomorrow, Dan? Okay. Tomorrow just feels like it's a setup for boom skis, Dan. Can you imagine holding puts? And then you're like, whew, thank you, Powell. And then you go to the bathroom and come back, and you're like, wait. wait. Microsoft did what? Meta did what? They crushed earnings? Spy at the highs of the day? What happened? Right? Impressive. Look at that. That was a pretty sweet triple bottom, though. That was a sweet bottom. Yeah. Tomorrow, new all-time highs. You know what sucks? It sucks being a bear in the market, honestly. It just sucks. You know? Every little thing that happens, positive, boom skis. Meta's not stopping. Meta's at 750 now. Fabian, you did those YOLO puts, right? Yeah. Yep. Even like look at this. Even Robinhood is cooking now. Robinhood also beat earnings, guys. Sheesh. Robinhood is going for 111. All-time highs is 113.44. Yeesh. Everything just destroyed earnings. Everything. Meta crushed. SPY highs. Microsoft crushed. Robinhood crushed. We own the float. So Robinhood expected revenue was 989 million. They reported just over $1 billion in revenue. Over $1 billion in revenue from Robinhood. What's the revenue for Webull? Does anybody know? Maybe Sean, yeah. Does anybody know? Like just off the top of the head? Because I don't want to look. $1 billion from all the people. All the people in the Robinhood accounts. It did be okay. It did. Look at that, right? So 250 resistance, obviously. Not surprised. There's a supply zone there. But crazy. Crazy. Robinhood is losing some of the steam there. Uh-oh, Robinhood is dropping, guys. It's dropping. See? Like I said, if I'm going to bet against anything, it's only Robinhood. But this one's still going to end up destroying your puts. Because it's going to be flat. It's either going to be green or flat. That doesn't really help anybody, does it? So. Uh, 100 and no, really? Damn. Yeah. Robinhood does things that Weibo just can't do yet, you know? They just do things differently. They're pretty good at advertising. It's pretty good, you know? Just a little bit. REPL. Ooh, okay. Almost back to the highs there. So these names are coming back to life. Meta is not stopping. Meta's up 9% now. I don't see any new headlines for Meta like, oh, we're doing splits, we're doing a share buyback. Just amazing EPS and amazing revenue. Cooked. Cook. CVNA? Oh yeah, that was the other one today. CVNA. These guys came from the abyss. Do you remember this, Dan? From $6 to $360. From 6 to 360. I remember there was a guy on stream and he was saying, oh, I know the people that run this company, they're really scammy. I don't like the family. It's at $100. You know, it's gonna crash. It just came from $6. It's gonna go back from, you know, it's gonna go back to $6 or $10. They're really scammy. Blah blah. Look at the damn stock now, 360. Right? This is why you cannot listen to people. This is why you need to pay attention to the charts and you need to have your own plan. We easily could have been like, oh, you know the family? Oh, okay. Yeah, the stock has gone from 6 to 100. It's gonna crash, right? Let's buy some puts. Look at it now, 370. So always have your own plan. And yeah, Meta is not the company to bet against. Microsoft is really not the company to bet against. Right? Not in a strong market like this. Like I said, the only one I would have bet against is Robinhood because it's done quite a lot and it's not to the same standard as Microsoft or Meta. It's just not. And you can see that it's the only one that isn't flying, right? This is madness, Dan. Look at that. Damn, we really should have bought some dips. We should have bought some dips, Dan. But we were down 80 cents, $1, $2. Like, what the hell is that? Well, we're 67 cents away from all-time highs, guys. Oh, my goodness. Can you imagine being a bear and you're happy and you're smiling? And then all of a sudden, your face changes. Violence. You smile for the rest of the day and then you go into the close, knowing full well you're about to be entered tomorrow. That's painful. You can't sleep tonight. Shish. Anyways, SGD failed at 250 for now, so that's going to be the resistance. Meta is not stopping. SPY, not stopping. Microsoft, not stopping. Robinhood is still kind of trying to decide what it wants to do. CVNA is at 376 now. That thing is up 13% after hours. Shish. Everything just crushed earnings. 96%, Dan? Shush. Look at CVN8, 380, 385, 15%. That thing is flying. Cooking. NVIDIA, 181.37. Yup. Yup. Tech stocks are gonna cook tomorrow. Is Bitcoin pushing too? Kind of. Kind of. Crazy. Exactly, Dan. Powell, who's that? Who's that? Yeah, the market makers, and we've known this for a long time, right? The market makers just use these meetings as a way to create opportunities. Like these dudes just created an opportunity out of nothing. Everything that Powell said we knew was coming already. And somehow we crashed to the abyss and boom skis. So while people are panicking and watching Powell, the criminals are behind the scenes collecting the monies. And now we went boom skis. Look at that. Robinhood is almost back to flat. So this is the only one that isn't cooking. Cooking. Exactly, Bilal. Exactly. Crazy. Abyss, maybe. For SPY, maybe. If the data isn't good, maybe. HDD is breaking out again. So this is my favorite momentum stock for now. All-time high? Yeah. There we go, 260. $262. There we go. Is anybody playing with SGD, scalping SGD? Anybody? Everybody is tired for the day. So AB, if you can get into the pre-IPO, I think it's going to be a good thing. If you can get into the pre-IPO, if you can get in, right? Because you cannot buy it, like you cannot get in unless it's the pre-IPO. So if you can find a way to get in, then that's fine. Alrighty. Fake FIG. Let me refresh the earnings list. I don't think it's on here. It shouldn't be on here, but it should be on tomorrow. FIG. Look at the IPO calendar in Discord. In Trade Ideas, scroll up a little bit. There's an IPO calendar. It was on there. What if I'm don't have a chance that Robinhood wouldn't fill? There's a pretty good chance you're not gonna get the shares, and then you just show up on stream tomorrow. We'll see. Alrighty, show up on stream tomorrow, and let's have a look. Let's have a look. Alrighty, y'all. We're gonna leave it here for the day. Don't forget to smash a like, guys. I know it's the second time you're smashing it. Second time, right? Can we get to smash a like if you haven't already, please? Alrighty. So take a second, smash a like before we leave. Smash it. Hit that subscribe if you're new to the channel as well. And if you're not a member yet and you want to join us in Discord, click the link at the bottom of the chat. Alrighty, thank you, AB. Have a wonderful rest of the day. We're gonna continue in Discord, so you can join us in there if you want to. You have 15. Ahmad, yeah. Let's go, Tony. See you tomorrow. Well, I'll see you tomorrow. Alrighty, all. Much love. High five. High five. Have a good evening. We'll continue in Discord. Peace for now. Bye, guys. SGD is still my favorite stock after hours. Just in case you're wondering, you know. My favorite stock after hours. Alrighty. Bye for now. See you guys in Discord. Pushing for brand new highs here. Bye-bye.